Okay, now we shall go ahead and take on this example. Again, it is relating to share of loss relating to an associate. Yes, ma'am.
An entity has following three type interest in an associate. Equity share, 25% of equity share to which equity method of accounting is applied. Preference shares, non-cumulative preference shares that forms part of net investment in the associate. Such preference shares are measured at fair value as per IND AS 109.
Okay.
Long-term loan, the loan carrying interest of 10% per annum. The interest income is received at the end of each year. The long-term loan is accounted as per amortized cost as per IND AS 109.
IND AS 109.
This loan also forms part of net investment in the associate.
The reason for that may be that this loan will not be repaid by the investee, the associate. Is that fine? Therefore, all the three investments are taken as what? The total investment in associate. Next.
At the start of year 1, the carrying value of each of the above interest is as follows. Equity share 10 lakh.
So rupees 10 lakh is your investment in equity instrument, right? Of my company associate. How much? 10 lakh rupees. Then
preference share 5 lakh and long-term loan 3 lakh.
In all, rupees 18 lakh is a total investment in associate. Next.
Following table summarizes the changes in fair value of preference shares as per IND AS 109. Impairment loss on long-term loan as per IND AS 109 and entity share in profit or loss of associate for the year 1 to 5.
That is 25% share in my profit or loss.
They made a chart with 4 columns. First column end of the year. Second column increase or decrease in fair value of preference shares as per IND AS 109. Third column is impairment loss / reversal on long-term loan as per IND AS 109.
Okay.
And the last column is entity share in loss, profit or loss of associate.
Now, have they shown increase or decrease? Any decrease in brackets?
Yeah, brackets lower.
Which one decrease?
Decrease in brackets.
And then impairment loss and
reversal in brackets and entity share of loss in brackets.
Okay. Yes.
So year end 1. So 50,000 negative.
So 50,000 negative under
increase or decrease in fair value of preference shares.
That means the preference share has reduced by rupees 50,000, right? Next.
Then impairment loss 50,000 rupees.
50,000, that's the impairment loss. Next.
Then entity share in profit or loss of the associate, loss is 16 lakh.
Loss is 16 lakh, nothing but 25% of the associate's loss is 16 lakh rupees. Next.
Next year 2, 50,000 again negative, decrease in fair value of preference.
Year 2, 50,000 decrease, right? It is a decrease, is it?
Yes.
Okay, in brackets. Next.
Next, impairment loss nil.
Impairment loss nil.
Then entity share of loss again is minus 2 lakh.
Minus 2 lakh, okay.
Then 1 lakh rupees is the increase in fair value of preference shares.
Third year. Year 3, 1 lakh increase, okay.
Then impairment loss is 50,000 rupees.
50,000 rupees reversal or impairment loss?
They put loss only.
I think they should have given in brackets. I think so. Okay, let's see. No problem. Then next.
Then nil.
Nil. Okay,
then year 4, 50,000 rupees positive.
50,000
increase in fair value of preference.
Okay.
Then nil. Then 10 lakh rupees is the entity share of
profits. Okay.
Then year 5 again 30,000 rupees increase in fair value of preference shares.
Okay.
Nil, and entity share of profit is 10 lakh again.
10 lakh rupees.
Now throughout year 1 to 5, there has been no objective evidence of impairment in the next investment in the associate. Sorry, net investment
the net in the associate.
associate.
Okay.
The entity does not have any legal or constructive obligation to share the losses in the losses of the associate beyond its interest in the associate.
That's it.
Now, based on above, determine the closing balance of each of the above interest at the end of each year.
Okay, so now we shall go ahead and take on this example. Here we go. Yes, ma'am.
So, year 1, the below table summarizes the closing balance of each of the interest at the end of year 1. They made a chart with 6 columns.
Yeah.
Type of interest, opening balance at the Start
Opening
of the year,
balance.
then adjustment as per IND AS 109.
In days 109.
Balance after applying IND AS 109.
Uh-huh.
Share in profit or loss of associate.
Uh-huh.
And then last is the closing balance at the end of the
End
year.
of that year.
So equity share.
Now first we are starting year 1, right?
Yes, sir.
Year 1. Yes, ma'am.
Year 1, and the chart itself is for year 1.
Year 1, yeah.
So type of interest is equity share. Opening balance is 10 lakh.
Opening balance rupees 10 lakh. And then next.
Adjustment as per IND AS 109 is not applicable.
Uh-huh.
And then balance after applying IND AS 109
Same
is
10 lakh. Then.
And then share in profit or loss on the loss 10
Remember, the loss is 16 lakh in all for the first year. Of that, 10 lakh loss will be now adjusted against investment in associate. This 10 lakh rupees, which is investment in my company's equity shares, right? So the entry, in case you want to pass an entry, is going to be share of loss account debit to investment associate. How much? 10 lakh. You cannot assign more than 10 lakh because it will take it to negative figure, right? So out of 16 lakh rupees loss, 10 lakh is now allocated to investment in associate. So what is 10 lakh minus 10 lakh? It becomes nil or zero closing balance. Next.
Preference shares. Opening balance 5 lakh.
5 lakh rupees. Then.
Adjustment minus 50,000.
That is a 50,000 fair value reduction, right? Given decrease in value of investment as per IND AS 109. So what is the amount after adjustment? 4 lakh and 50,000. And here, what is the loss still, out of 16 lakh loss, 10 lakh was assigned to investment. What is the balance? 6 lakh. Of that, now 4 lakh and 50,000 loss can be
assigned to
preference share. What is the entry? So, a share of loss account debit to preference share investment. Is that fine? 4 lakh and 50,000 written off. It becomes
nil.
Zero. Next.
Then long-term loan.
But remember, you still have 1 lakh and 50,000 loss not yet recognized, right? The long-term loan, what is the amount?
3 lakh.
3 lakh rupees.
Minus 50,000 adjustment as per IND AS.
Impairment loss is 50,000.
And balance after applying
2 lakh and 50,000.
Then 1 lakh 50,000 is the share of
Remember,
loss.
a 16 lakh loss, a 10 lakh loss has been assigned already. Another 4 lakh 50,000 assigned. The balance 1 lakh 50,000. What is entry? So a share of loss account debit to loan account, the long-term loan. Is that fine?
Yes, sir.
1 lakh 50,000 gone. What is the carrying amount?
1 lakh.
1 lakh. Therefore, end of year 1, investment in associate hyphen equity shares, 0. And investment in preference shares,
Nil.
0.
Then long-term
And
loan.
long-term loan, how much?
1 lakh.
1 lakh. That's it. That is for year 1. Is that fine? Now let us take on year 2. Remember, year 2, the company, my company, also reports a loss of 2 lakh, right? Your share of loss is 2 lakh.
So below again the same table.
On my company's loss into 25% is 2 lakh. Fine. Yes, ma'am. Year 2. Opening balance for equity.
0.
0. Anyway, it's going to be 0.
Yeah.
You cannot assign any loss to this, right? Already 0. Next.
Then not applicable other things.
Okay, then.
So closing balance is also 0.
Then.
Preference shares opening balance nil.
Opening
but there is an
balance nil.
adjustment loss of 50,000.
50,000, remember, there's a further decrease in preference share. But now the problem is, it's already nil, right?
Yes.
So what happens now? You have to revise. In case you want to adjust a 50,000 loss as per IND AS 109, you have to reverse a loss that was earlier assigned to preference shares. Is that fine? So what you should do first, remember you assigned a loss last year, 4,50,000 loss to preference shares. Just show the chart, year 1. That out of 4,50,000 loss assigned to preference shares, 50,000 should be what? Reversed. So that 50,000 loss can be now written off as per IND AS 109. Is that fine? So what you should do, you have to first reverse a loss, what is recognized earlier, like preference share account debit is share of loss, reversed. And then you write off that 50,000 for the fair value adjustment, right? That's what they meant. Okay, second column, 50,000 adjustment. Then
negative. So balance after applying is also negative 50,000.
Negative 50,000.
Share of profit or loss of associate will be 50,000. then the closing balance will be nil.
That 50,000 share loss is a reversal. Is that fine?
Yes.
Since preference share is nil and you want to reduce it by 50,000 as per IND AS 109, you have to reverse a loss that was earlier recognized, right? Got it?
Yes, sir.
So therefore, what you should do, you are supposed to think of two entries. One is, preference share account debit, 2 share of loss. And then profit and loss account debit, 2 preference share. Is that fine for the fair value adjustment? Got it? So therefore, please remember, this is the toughest part to understand. So 50,000, 0 preference share opening balance. If you want to reduce it by 50,000, you had to reverse a share of loss earlier assigned to preference shares. Then next, anyway,
So there's a
last column.
star note given
There is a
for
note.
that 50,000.
Read more. What is
Recognition of changes in fair value as per IND AS 109 has resulted in the carrying amount of the preference shares being negative 50,000 rupees. Consequently, the entity shall reverse a proportion of the associate's losses previously allocated to preference shares.
Exactly.
So out of the total loss of 2 lakh for the year, loss of 50,000 is only recognized. Hence, there is an unrecognized loss to the extent of 1,50,000 in the end of year 2.
Is that fine?
Yeah.
So that's at the end, okay. But remember, out of 2 lakh rupees loss already, now 50,000 loss of the previous has been reversed. In all, what is the total loss now?
1 lakh.
2 lakh 50,000.
Yeah.
Now go to the third line, the loan part. What is given?
1 lakh opening balance.
And then?
Adjustment nil.
And then
Applying
out of
it is
2
1
lakh
lakh.
and out of 2 lakh and 50,000 loss. Remember, 2 lakh loss for that year plus 50,000 reversed. In all, 2 lakh 50,000, 1 lakh has been assigned to loan, right? Balance how much? Loan will become nil, right? Out of 2 lakh 50,000 loss, 1 lakh has been assigned to loan. What is the balance now? Still 1 lakh and 50,000 not recognized. That's what they meant in the last line. Is that fine?
Yes, sir.
So point to note, I repeat guys, you had a 2 lakh loss in second year and the loss is reversed to what extent? For adjusting the preference share, 50,000. So the loss became 2 lakh and 50,000. Or that 1 lakh has been now used to write off the loan account.
Long-term loan. Yeah.
You still have 1 lakh and 50,000 loss not recognized. And don't pass an entry share of loss to liability because there is no legal or constructive obligation. Is that fine?
Yes.
But have in mind 1 lakh 50,000 loss not recognized. Then go to year 3.
So year 3, again equity share is nil for all the columns.
Now year 3, what is just go to the question. Tell me for year 3, what is the share of profit? The last column.
Nil.
Nil is it? Okay,
Yeah.
come back. Year 3, it's all nil, no? So no problem at all. Yes, ma. So equity
year
anyway nil. Okay, next.
Then preference shares adjustment as per IND AS 109 is 1 lakh.
Uh-huh.
So the balance also is 1 lakh.
It became 0. Now it's 1 lakh increase, right? So 1 lakh. Then
Share of profit or loss is negative 1 lakh.
negative 1 lakh.
And then closing balance is nil.
Remember
Then
that
long term.
we had a 1 lakh and 50,000 loss not recognized. All that 1 lakh is now assigned to preference shares, right? Next.
Long term loan again 50,000 rupees adjustment for the current year.
Uh-huh.
So then balance also is 50,000. The share of profit
That is
or
actually
loss
the
will be
reversal.
negative 50,000.
That is a
Reversal.
reversal, right? 50,000 reversal. So it is 50,000. And what is the amount after adjusting? 50,000, right?
50,000.
And loss assigned?
Negative 50,000.
Negative 50,000. What is the closing balance?
Nil.
Next.
The share in profit or loss for the year is nil. However, there was previously unrecognized loss of 1,50,000 which is allocated in the current year.
Exactly.
And after recognizing the above loss, there is no unrecognized loss at the end of year 3.
Next.
Year 4. Again equity share nil. And then share in profit or loss is 2 lakh positive.
Wait, I'll tell you. Go to year 4, go to the question. Now, what is a year 4 share of profits?
10 lakh.
The 10 lakh profit should be first used to reverse the loan amount first. And then preference shares. And then equity investment. The reason is In case a company goes into liquidation, who get paid first?
Reverse order.
Reverse. That is the lenders. And then the preference shareholders and then the equity shareholders, right? So, the 10 lakh, just see the loan account first. Loan, what is the opening balance?
Nil.
Nil.
Adjustment nil, balance
Adjustment
nil.
nil,
So
balance
3 lakh
nil.
is the share in
Remember,
profit.
it was 3 lakh loan initially
Yeah.
in the year, in the first year. That 3 lakh is first restored. So 3 lakh. Then let's go to
Preference
preference share. What is the opening balance?
nil.
Nil.
Adjustment 50,000.
50,000.
Balance is also 50,000.
Okay, wait.
Then
50,000.
share of profit.
Remember, it was how much earlier?
5
It was
lakh.
5 lakh, right? So reverse 4 lakh and 50,000.
No, 5 lakh.
5 lakh reversed?
Yeah.
The 5 lakh and closing balance how much?
5 lakh 50,000.
Sorry, 5 lakh reverse, not 4 lakh 50 for 5 lakh. Because 50 was the increase as per IND AS 109. Okay. So in all 5 lakh and 50,000. So 3 lakh, 5 lakh. Now what is the balance left of the profits?
2 lakh.
That will be used to increase the investment in associate. So opening nil, okay, and straight away 2 lakh share of profits. And what is the closing balance? 2 lakh.
2 lakh.
Is that fine?
Yes.
In case you want a journal for this, what is entry? It is going to be loan account debit, 3 lakh. And then preference share investment account debit, 5 lakh. Investment associate debit, it is 2 lakh. 2 share of profits, P&L how much?
10 lakh.
Understood? Now let's go to last year, year 5.
Year
Year 5 again the share of
10 lakh.
10 lakh profit, right?
Yeah.
Again,
So equity share, should I come in reverse order?
no, because already loan has been
Already
restored,
loan
no
and
problem.
preference share restored. So equity share 2 lakh opening balance, adjustment not applicable, balance is also 2 lakh.
Straight away 10
Share
lakh
of profit is 10 lakh.
can be to equity, right?
Yeah.
Equity accounting.
So
in all
closing
12
balance
lakh.
is 12 lakh.
And then what a preference share? 5 lakh 50,000.
Adjustment 30,000 rupees.
30,000 increase. Okay, then
5 lakh 80,000.
5 lakh 80,000 and nothing adjusted 5 lakh 80,000. What about loan?
3 lakh.
3 lakh rupees.
No
Any
adjustment.
impairment? Nothing.
No.
And closing also 3 lakh. So guys, here the most difficult thing is in year 2. Just go to year 2. In year 2, you should understand how the preferentials are counted. Preferential opening is nil and decrease by 50,000, right?
Yeah.
If you do that, it will turn what? It will turn negative. For that, what you should do, the loss earlier assigned to preferential should be reversed. That's only the crux, okay? So guys, please go ahead and go through this example before the examination.
Yes.